If you're like most people, you grew up wanting to become wealthy and financially successful and rich, but chances are, if you're like most people, you didn't grow up learning how to do that when you were in school. And when you don't have this base financial education, then you're more likely to fall into money traps that keep you broke and poor, which is why in this video, I'm going to be going over 15 money traps that you want to avoid. There are some financial traps out there that are pretty obvious, like credit card debt. It's pretty obvious that if you have $10,000 worth of credit card debt where you have to pay 25% APR, this credit card debt is going to keep you broke. But there are other money traps that aren't so obvious. The reality is not only are most people not where they want to be financially, but most people don't even have $1,000 saved up in their bank account to protect them from an emergency. The fact of the matter is there's a lot of industries out there that profit when you don't understand money. The less you understand, the more they make, which is why you want to avoid these money traps. And I'm going to be going over 15 money traps in this video. But before I do that, I need you to do me a quick favor and punch that thumbs up button below. The first money trap that you want to avoid is the $2 destiny trap. Please God, let me be the lottery winner just this one time. The lottery is an interesting way to invest your money because your returns can be pretty good if you win. I mean, if you invest $2 into a lottery ticket and you win, you could win something like, I don't know, $10 million depending on how big the lottery is. It could be billions of dollars, I guess. But if you just invest this $2 and you get that winning ticket, you can win a whole lot of money. The issue is you're not gonna win. The odds of you winning the lottery are 1 in 305 million. So you have a better chance to get hit by lightning 300 times than you do of winning the lottery. Now, this is where a lot of people say, but Jaspreet, I still have a chance to win, right? Yeah, technically you do still have a chance to win. And if you're that one lucky person, you could turn your $2 investment into $10 million. And this is where the majority of people think, let me double my odds. If I just buy more lottery tickets, now I got a better chance to win the big jackpot. That's why the average American is spending just over $80 a month on lottery tickets, which is right around $1,000 a year on lottery tickets, because if you buy more tickets, you improve your odds, and if you win the big jackpot, and the returns are huge. And so now, if you are spending $1,000 a year on lottery tickets over your lifetime, you're gonna spend around $40,000 on lottery tickets, assuming that the price of lottery tickets don't go up. And chances are, with your $40,000 investment, so 40 years, you are gonna win nothing. But let's take a look at this a little bit differently with the minority mindset. If you took the same $1,000 and instead of putting it into the lottery where you have a very small chance of winning, let's assume now that you invest this money for the next 40 years and you just get the average stock market return of 10% a year. That means over the next 40 years, you will be able to turn your $1,000 investment, not in the lottery, but in an investment, you will be able to turn your $1,000 annual investment into $500,000, $500,000. You just won the investment lottery because instead of taking your money and burning it here, you put your money somewhere useful, and now you actually have some money that you can play with. In the financial world, they call the lottery an idiot tax because the people that are blowing all their money on lottery tickets are, well, not always the most financially educated, which is why I want you to understand this. If you like numbers, take a look at this. Your odds of winning here are way better than you winning these odds. Here, you could win big, but you're probably not gonna win anything. Here, you can also win big. It's gonna take more time, but you have much better odds to win here. The second money trap you wanna avoid is falling into the 0% APR game. If you walk into the electronics store and you got $600 in your pocket to buy a TV, and you start looking at TVs and you find one that you like, the salesperson might come up to you and say, oh yeah, this is a really nice TV, but can I interest you in this super nice $2,000 TV? And you might say something like, well, I don't got $2,000 with me right now. I can only afford the $600 TV. At this point, the salesperson will say, oh, don't worry, you can buy this TV with no money down, with a 0% APR, and you can just pay it off in 12 months. You can keep that $600 in your pocket and you can invest it somewhere else so you can get a better return on your money, and now you can buy this $2,000 TV, pay it off in installments, and pay $0 in interest. What could be better than that? The problem with 0% APR, even if you have $2,000 in your pocket, is you never feel the pain of actually spending your money, because now you are just financing everything. You are playing the payments game, and you might think in theory, yeah, I could take that $2,000 that I have today and invest it and use my investment money to buy this TV now because I can just pay it off in installments with my investment profits. But the reality is nobody does that. What ends up happening for so many people, and the reason why 0% APR is so profitable, is because banks and financing companies understand that as soon as you go out and you buy this $2,000 TV with 0% APR, you still have money in your pocket. Now, you're going to be more likely to go to the furniture store and buy a bigger sofa set because now you can finance that with 0% APR. And then you're going to go to the computer store and buy yourself a new laptop with 0% APR. And so you're way more likely to spend more money because you never have the pain of money leaving your wallet today. Now, if you are a financially minded person, you might think, well, I'm not one of those people. I could use that money today and invest it and get a better return on my money. Now, even if that's the case, I don't want you to get into the game of financing liabilities, even if it says 0% APR, because I want you to spend more of your energy and efforts building your assets, building your investments. That way you don't got to worry about the price of these $2,000 liabilities. That way you can afford to buy this with cash. So I want you to focus on just growing the investments and not worry about making the payments on your liabilities. The third money trap you want to avoid is not investing your money, especially when you're young. Most of us don't learn about money management and investing and wealth building and wealth protection when we're in school. We think that if we want to become successful, we got to get a good degree so we can get a good job. And once you have a good job, you're going to be set financially. I'm telling you from experience, I spent a lot of money on my education. I went to a good university. I went to law school. But I didn't learn a single thing about money or investing in the classroom, and now I make YouTube videos for a living. How you doing? So what ends up happening to so many people when you don't have this financial education is you graduate school when you're 20, 21 years old, and now you got all these student loans, and now you're finally in the real world, because for the last 20 years of your life, people keep talking about what the real world is going to be like, and now you enter the real world, and you get a job, and now you need an apartment, and you need a car to get to and from work, and so now you got these student loans, you got your car payment, and you got this apartment fee that you got to pay, and now all of your money is going out here, and you're finally starting to make a little bit of money, and the last thing on your mind is putting your money into the stock market or using your money to buy real estate investment properties, because now you finally have some money. And so now you want to go out and buy yourself a nicer car, you want to have a nicer apartment, you want to start buying nicer clothes, you want to start living this nicer lifestyle because you finally got a degree and you finally got your job. And so now in your early 20s, you're not saving and investing your money, you're enjoying your life because you have your whole career ahead of you. Next thing you know, you're 30 and now you're thinking about settling down, and now you got to buy a house, and now you got to spend all of your money buying this house and renovating this house, and then you're thinking about having kids, and now you got to pay for your kids, and you got to think about their education, and you got to think about the food that they need, and you got to think about their diapers. And so you never think about this opportunity of really investing your money because you have all these other expenses that keep coming up. Now you're in your 40s and you're seriously starting to think about your retirement, and now you got to start playing catch up because nobody taught you to start investing your money when you were younger. Here's a little bit of advice. No investor has ever in the face of this earth ever said that I wish I started investing later in my life. Time is one of the most powerful factors when it comes to really building your wealth and letting your money compound and grow, because if you start investing when you're 21 years old, and even if you don't have a ton of money, let's assume that you're only investing $300 a month. I know that's not a little bit of money, it's a decent amount of money, but if you just start investing with $300 a month at 21 years old, and you do this for the next 45 years, so until you're 66 years old, until you hit retirement, and you never raise that amount. So you always just keep investing the $300 a month, and let's assume that you get a below average return of 8% a year on your money. That doesn't mean that every single year your money is going to grow by 8%. Some years it's going to grow less, some years it's going to grow more, but on average, you're getting yourself an 8% return on your money. By the time you retire, when you're 66 years old, your $300 monthly investment is going to grow to $1.6 million. But if you start investing a little bit later, let's say that you don't realize this investing thing until your 40s, and now you're 42, 43 years old, and now you start investing your money and you want to make up for lost time. So now you start investing double this amount. You start investing $600 a month, and you're going to continue doing this until you retire, until you're 66 years old, and you can maintain that 8% annual return on your money. Now your money is going to grow to right around $500 $300,000, even though you have doubled your monthly investment just because you have less time on your side working for you. And so now, because you have less time, you're gonna have a third less money than if you just started earlier. This is why time is so important, which is why it's so important for you to be investing in money. Now, if you do want to learn more about this, we have a free guide on money management, which if you haven't read yet, you can download it for free on our website, theminority-mindset.com, and I'll also link it for you in the description below. The fourth money trap that you want to avoid is sports betting. Digital sports betting is a brand new trend, and it's gaining a lot of steam, which is not a good thing. I mean, you have companies like DraftKings and FanDuel, which are encouraging you to go out and start betting on your favorite sports, and they're incentivizing you with free money. Get $100 to make your first trade, or win 100-to-1 odds if you're right here. I want you to put yourself in the shoes of these companies for a second, because if these companies are giving you all this money, or they're giving you these huge incentives to start investing, why would they be wanting to do that? Well, they know that once they got you in the app and once they got you hooked to sports betting, they're gonna be able to make so much more money because they know that you're gonna lose your money. The only person or team that's guaranteed to win when it comes to sports betting is the casino where you're betting your money. Number 5, the buy now, pay later system, or as we like to call it, broke now, broke later. The whole buy now, pay later option is kind of like the 0% APR option, except when people typically talk about 0% APR, they're usually talking about going to buy the new iPhone and then financing it over 12 months or 24 months with 0% APR. When I talk about buy now, pay later, what I'm talking about is when you go shopping online for clothes at your favorite e-commerce store, when you get to that checkout page, you have the option to now buy now, pay later because of things like Affirm and Afterpay. The whole idea here is you don't have to pay $100 for your clothes today. You can just pay your clothes in installments over the next 3 months or 6 months. And if you don't pay it in time, well, now you're gonna get slapped with a big fee. The reason why these buy now, pay later systems are becoming so popular is because they're making so much money. I mean, stores are realizing that they can sell so much more stuff if they just give you the option to pay later. And these companies that let you buy now, pay later are making so much money because they know that so many people are not gonna pay their stuff on time. So now you gotta pay them an insane interest rate to buy your clothes. I don't want you to play that game. Use your money to make yourself rich. Don't use your money to make your bank or these financing companies rich. 6th, your family is not financially prepared for a tragedy. As an attorney who is not your attorney, I feel obligated to tell you that it is very important for you to really think about estate planning early, because you never know when someone's gonna go, and so it's just better to plan ahead and have a will or a trust or just some sort of estate planning in place, because the last thing you want to happen is for you to unexpectedly die and now the government has to decide how to distribute your money. Trust me, you don't want the government managing more of your money. On the flip side, you also want to have insurance, because insurance is there as protection to protect you from worst case scenario types of situations. Now, I know no one likes paying for insurance, it's not fun, but it's a small price you pay today to protect you against a big headache in the future. So this is things like car insurance, home insurance, health insurance, and life insurance. The whole idea behind life insurance is if you were to tragically die and you're a breadwinner for your family, then your insurance company would come in and they would give your family a big check, say for $500,000 or $1 million, depending on what you decide. And now at least your family will be financially okay, so they don't gotta go and start a GoFundMe page or go and beg their family and friends for money so they have money to pay their bills and pay your funeral costs and just be able to survive. You never want to have to deal with that situation for yourself or your family, so think ahead and have life insurance to protect you. Now, I know this isn't a very fun topic to talk about and no one likes paying for insurance, but the good news is life insurance doesn't have to cost you a whole lot of money. Like if you're a healthy 30-year-old guy, you can get $1 million life insurance policy for less than $30 a month. I'm not gonna go any further into life insurance in this video because we have a lot of things to talk about, but if you do want to see how you can get a free life insurance quote, you can check out our sponsor Policygenius, because you can go there and get a free life insurance quote in just a few minutes, and they stand by what they do, because if you can go out and find a cheaper life insurance quote somewhere else, they will pay you $100 for wasting your time. So if you want to see how you can get a free life insurance quote, I got the link to how you can do that with our sponsor Policygenius in the description below. The 7th money trap you want to avoid is using the casino as a way to get rich. I never found gambling to be fun. I've only gambled one time, and I went to the casino with my friends and I took $7 with me. That was my maximum. I knew that I was only going to gamble $7, no more, no less. And I knew that I wasn't going to walk away with any money. I went in with the mindset that I'm going to go and lose this $7. All of my friends were gambling way more, but I went in with that mindset. And I took my $7 and I started gambling it. And I turned my $7 into like $12. And I was like, wow, I made a lot of money. But I knew that this was not the place for me to really try to make money. So I just kept gambling the money until I was at zero, because I didn't go there to make any money. I knew that I was going to walk away with nothing. So I might as well just go in with that mindset and have a little bit of fun. So I don't care about walking away with any money. Personally, I like to go to places like Dave & Buster's and even Chuck E. Cheese more than I do casinos. But I guess that's just me. But there's a lot of people that don't think like me. Just like with sports betting, no matter what the odds are, at the end of the day, the house always wins. There's a reason why casinos are in these huge, massive, beautiful buildings. It's because they make so much money. And who do they make money from? Well, it's the people that are gambling away their life savings at the casino. Number 8, you live for Instagram. So this one isn't just a money trap, it's also a life trap. Because not only do you have so many people that are literally racking up credit card debt, that way they can have the most beautiful Instagram page in the world, but you also have people that are living their lives just for social media, and so they ignore their life out here and they live miserably with depression and anxiety out here in real life just so they can seem happy in their digital life. I mean, it can be really hard when you think you're doing everything right, but then you go on to Instagram and then you see these 22-year-olds driving i8s, and you see these 24-year-old guys that are jacked, that have these perfect families where everything looks great, and now you look at your real life and you're like, wait, why is my life missing all this excitement? Now, I'm going to be very honest with you. I have worked with quite a few social media celebrities, and a lot of the things that you see on social media are just poo-poo. There are people who have nice cars on social media, but they have no savings, that they have no investments, and they're living paycheck to paycheck just to make the payments on their car. There's people that look like they're perfect couples and perfect families on Instagram, but as soon as they get off of the gram, they're always fighting and arguing and they don't get along at all in real life, but on Instagram, they look great. It's not everybody. I mean, you have some people that are very successful and very accomplished and very happy that are on Instagram, but you just gotta remember that Instagram is a highlight reel. It's not somebody's real life. And so when you're looking at somebody's Instagram, you're just seeing the highlights, you're seeing the best parts. But when you don't understand that, Instagram really becomes a money trap, because you see everybody flexing with these nice cars, and you see people showing off this new clothes and people having these brand name stuff, and you think, wow, if all these people can have all this nice stuff and they're showing it off, maybe I should be doing the same thing too. I mean, it's like keeping up with the Joneses, but the digital version, because now it's trying to flex on Instagram where everybody's trying to show off and one-up one another. Sometimes, honestly, one of the best things that you can do is just take a break from Instagram and Facebook and remember what's real and what's digital. I mean, I did the same thing. I spent like 2 years just completely away from my personal Instagram page because I wanted to kind of get away from that and just focus on me and focus on building minority mindset. And this brings me to number 9, using tomorrow's income to pay for today's lifestyle. So we live in a culture here in America where people really live on their emotions. We feel certain things, and when we want something, we gotta have it now, even if you can't afford it. And so how do you fund something that you want now when you don't have the money to buy it? Well, through the help of debt. When you go into debt to finance your Gucci wardrobe, or when you go into debt to finance your vacation to Cancun, well, you're using tomorrow's income to pay for today's lifestyle, because your debt is literally taking your future income and spending it today, and now you're going to spend your future income just paying back this debt plus interest. The number one reason why the majority of people will never become financially successful is because they have all their money going out to buy these liabilities, which are things that are not making them money. And not just that, they're using debt to finance these liabilities. And so now they have no money left over to make themselves rich, because now you have no money to buy assets or investments, which are things that will pay you for owning them, because the only thing that you own are a whole bunch of debt payments that you have to make every single month for the rest of your life. Number 10, you have no savings. This one might be hard to understand because a lot of us kind of grow up being told that saving your money is how you become wealthy. That's what I was told. But the reality is you're never going to become wealthy by just saving your money. Your savings are getting eaten away by inflation, and so saving is not the path to wealth. But saving does have its place. You should be saving your money for 3 things. You got to save your money for emergencies, because guess what? Sometimes life happens and you're going to run into emergencies. So you want to make sure you have cash for that. You want to have savings for investments, so you have money saved up to buy investments when an opportunity comes your way. And you got to have savings to buy a big purchase. If you want to buy a home, you want to buy a car, you want to buy something nice, it's going to cost money. So you want to have savings to do that. But the thing that I'm talking about here is you got to have savings to protect yourself from emergencies, because the reality is when your window breaks, when your car breaks down, when your AC stops working, you need cash to fix that. And the last thing you want to do is now you're trying to build your wealth, but you have no savings. And now the AC stops working. And so now you got to go $2,000 into credit card debt because you didn't have any savings in the first place. Saving your money is not fun or exciting. I mean, it's literally just creating this cushion or barrier or kind of shield that way you have this money in a savings account that you hopefully will never have to use, but is there just in case. So I really like nice cars, and I want you to own a nice car, and I want you to drive a nice car, and I want you to have your dream car, even if it's a supercar. But the thing that you got to understand about cars is cars are not going to make you any money. Okay, your cars are just something you need to get you from point A to point B. It's like a shirt, okay? And a lot of people are buying cars thinking or putting a lot of energy trying to figure out how they can get the most value or the most money out of their car. And so they're spending hours of their lives trying to research how they can save a couple $1,000s on a car. But at the end of the day, your car is just a utility. It's just something to get you from point A to point B. And not just that, the average person in the United States is paying almost $600 a month to finance their new car. And so if you do not have this wealth built, if you do not have savings, if you do not have investments, and you have the ability to pay $500 or $600 a month for your car, your priorities are in the wrong place. The first thing you gotta do is get rid of your Beamer right now, okay? I like BMWs, but right now you can't afford one. Now, you gotta take this money that you were putting towards your car payment and put this towards your investments. That way now you have some investments, you have some savings, and you're building your wealth. Once you got that, now you can talk about buying a car. But the first thing you got to do is you got to build your wealth first. Once you got your wealth, now you can go out and buy a car without worrying about the price. Your wealth comes first, your car comes second. Once you got the wealth, once you got the first thing, buy yourself whatever car you want because now you got the money and the wealth to afford it. Number 12, you don't got a plan for your money. For the majority of Americans, their financial planning kind of looks like this. So you make money from your job, some of your money goes into your 401k, and then you pay taxes, and then you have some money go into your bank account, and then you wonder where all of your money went. One of the easiest and most powerful ways to really start being better with your money and have more money for your savings and investments is just to create a financial plan for your money. That way now you're telling your money where to go instead of you just always wondering where your money went. One of the simplest things that you can do is just follow our 75-15-10 plan, which says for every dollar that you earn from now on, 75 cents is the maximum that you can spend, 15 cents is the minimum that you should be investing, and 10 cents is the minimum that you should be saving. Now, as soon as you get paid, you can have your money go into different bank accounts, one for your spending money, one for your savings money, one for your investment money. That way now you know how much money you can spend on TVs and nice stuff, and how much money you should be investing, and how much money is there as a cushion to protect you as an emergency. The hardest part about doing this is just getting through the first 4 weeks, because everybody thinks, how in the world am I supposed to be able to only live off of 75% of what I make? But what you'll realize is all of us have expenses that we don't necessarily need. And so as you start cutting them off, now all of a sudden 6 months later, you're gonna have a brand new investment account and a brand new savings account with cash that you never knew that you had. Number 13, you don't take risks. I was being interviewed for a documentary, and the person that was interviewing me kept asking me, what was the thing that kept me going as an entrepreneur, even when I felt like I wasn't gonna be able to succeed and it felt like everything was going against me? And the thing that I always remembered was, I'm young and I don't want to live with regrets. That line, I don't want to live with regrets, kind of was like burned into my mind, because yeah, maybe I would fail, but maybe I wouldn't. I don't know. But the only way I'm going to know is if I try. And at least now when I'm 60, I'm not going to look back and wonder, I wonder what would have happened if I did something different when I was 22 or 23 or 24. Losing money can be painful, and making a mistake can be scary, and looking like a fool in front of all of your friends and family can be really embarrassing. I've been there for all of them. But the reality is these are kind of just the hurdles of getting to somewhere where you're not right now. Not everybody is cut out to be an entrepreneur. I'm not saying that you need to go out and start your own business, but you should be investing your money, and that is risky. I mean, putting your money in the stock market or making your first real estate investment has risks, and if you're not willing to take those risks, then you're never going to be able to reap the rewards of investing your money. You might lose money. I've openly talked about the mistakes that I've made as an investor. I even made a video where I talked about my worst real estate deal ever. If you haven't seen that video yet, I'll link it for you in the description below, but this is just part of the process. Without risk, you don't get any of the reward, and the more you do and the more you learn, the lower your risk becomes. Number 14, you're all about the brand name living before you can afford it. Gucci, Rolex, Louis Vuitton, all these things are cool, but you gotta remember, what do these things really mean? They're supposed to symbolize luxury and status and wealth, But if you don't have those things and you are really stretching yourself thin to buy it, then what are you really trying to do? Are you trying to hide some of your struggles or insecurities by buying these brand names? Are you doing this just to show it off on Instagram? Or are you doing it because you like the product and you can afford it? There's nothing wrong with you buying brand name stuff if you like it and you can afford it. But if you have this brand name stuff and now you're complaining about your money, or you don't have any savings, or you don't have any investments, and you don't know how you're going to become wealthy, well, now we have a problem. It's just like I said with the car. Get your wealth first and then buy the luxury second. And finally, number 15. This video wouldn't be complete unless I talked about it, but you're living that extra guac lifestyle. Every financial guru in the world loves talking about Starbucks and why you buying a $4 cup of coffee in the morning is the reason why you are broke. But the reality is a $4 cup of coffee is not the reason why you're broke. And buying avocado toast is not the reason why you're never going to be able to build wealth. And buying extra guac is not the reason why you don't have money to pay your rent. You got to dig a little bit deeper and really understand what's going on here. If you don't have any money and you have thousands of dollars worth of credit card debt, and you have tens of thousands of dollars worth of student loan debt, and you don't know how you're going to pay rent this month, and you're still going to Starbucks every single morning to buy a $4 cup of coffee, do you see something wrong here? Yeah, you forgot the croissant. This goes into a much deeper mindset understanding of money, because you can spend money at Starbucks and still become wealthy. Let's start by separating experiences from consumption. Because if you're going to Starbucks or if you're going out with your friends to eat, then yeah, it's okay to spend a little bit of extra money because you're going there to hang out. You're going there for the experience. So if you want to buy a $5 cup of coffee, you can do that because you're going there for the experience to hang out with your friends. But if you're just going to Starbucks every single morning to get your morning cup of coffee and you don't have the money to do that, well, you could save a whole lot of money just by making your coffee at home. Now, if you got the money to do that, then sure, go ahead. But if you don't have the money to do that, now you got to really start thinking, how can you save some money by not blowing your money on these things? If you've been subscribed to our channel, you know that I love guacamole. And yeah, I could easily go out and afford a $4 side of extra guac, but I don't do that because I know that if I pay the $4 for extra guac, I'm going to get one side of extra guac. But if I just go to Kroger, I can buy myself an avocado for less than $1, and this avocado can give me 4 sides of extra guac. So $1 here for 4 sides of guac, or $4 here for 1 side of guac. It's the mindset thing here. First, you got to separate the experiences from just consumption, and now with their consumption, you got to figure out what you want and what you need, and if there's other ways to go about doing it, that way you can keep more money for yourself so you can use more of your money to make yourself wealthy instead of just making everybody else around you rich.
What do you wish we taught everyone from the ages of 10 to 20?
Sure.
5 different things around money.
First thing would be, what is money? Because money as we know it is fake. Our dollars are just pieces of paper.